So there is a massive warning for Dogecoin and other cryptos coming from the U.S. government, and I think this is exactly what every holder needs to see. So we are now seeing that the White House wants to set out a cohesive set of policies to regulate cryptos as current legislation and its enforcement are scattered across sectors and agencies. As per official reports, the Biden administration will release an executive order in the coming weeks to task federal agencies with assessing the risks and opportunities that cryptos pose. Moreover, the order is set to come under the umbrella of national security efforts to employ a cohesive regulatory framework that would cover cryptos, stablecoins, and NFT. So this is kind of a make or break situation for Dogecoin and other cryptos. And since the U.S. government is trying to examine the risks that crypto poses to them, I think we may hear some bad news once these policies are finalized. And this can be bad for crypto holders and the overall crypto market. And we are now seeing that some market analysts are thinking that these new developments from the Biden administration may result in a broader crypto crackdown. For example, Eric Balchunas, senior ETF analyst at Bloomberg, believes that the Biden administration viewing crypto as a national security threat may also be behind the constant rejections of Bitcoin spot ETF. And this is why he referred to the new developments as a broader crypto crackdown. And another thing is that the Biden administration is also preparing to release an initial government-wide strategy on digital assets, including cryptos. And the strategy is being drafted as an executive order, and the senior administration officials have held multiple meetings on the plan. Moreover, the finalized executive order is expected to be on President Joe Biden's desk in the coming weeks. And it is expected that the strategy could be released as soon as next month. And the main agenda of this crypto strategy is likely to be about economic, regulatory, and national security challenges posed by cryptos. And it will direct various federal agencies to weigh in with their assessments of crypto's risks. So this is yet another thing indicating that the U.S. government may be coming up with something bad for the crypto market. And as per Jerry Brito, executive director at Coin Center, one provision in this proposed bill would be disastrous not just for cryptos, but for privacy and the due process generally. He revealed that the so-called special measures provision would essentially give the Treasury Secretary unchecked and unilateral power to ban exchanges and other financial institutions from engaging in crypto transactions. So the point is that things can get worse for the crypto market if the U.S. government really comes forward with these strategies for cryptos. And I think that the U.S. government is now going to regulate cryptos and limit it in certain ways. And this is bad because this type of regulatory framework for the crypto market is against the decentralized nature of cryptos. And one of the biggest threats to crypto is overregulation of the industry. This scenario could smother the continued growth of the crypto market. Moreover, regulations that put too many burdens on individual investors could cause many to not want to get involved with cryptos. But the good thing is that this overregulation of cryptos is a bad thing only for the short term, and in the longer run, it can turn out to be beneficial for the market. The point is that crypto regulations can be good or bad depending on the specifics of the regulation and the overall number of regulations. Some regulation is needed, but overregulation could kill or limit innovation and growth in the crypto market. On the plus side, regulation expands the investor base by bringing more legitimacy to the crypto space. And legitimacy can increase institutional investment in cryptos by hedge funds and other institutions. The point is that cryptos do need regulation, but regulators need to be careful not to stifle innovation or drive away investors with burdensome requirements. All in all, I think that crypto regulation is good because it reduces scams and other fraudulent activities, and a proper regulatory framework will bring more investors to cryptos in the long term. And another important thing I want to mention here is that this upcoming crypto policy by the Biden administration has some positive points for cryptos. As a part of this policy, federal agencies will be meant to ensure that the U.S. remains competitive as the world increasingly adopts cryptos. And then they will be asked to submit reports of their findings in the second half of 2022. So the U.S. government is not just evaluating the risks posed by cryptos, but also the opportunities they bring. And while it appears as though this development is detrimental to cryptos, I believe the positive aspect here is that the U.S. government is focusing on cryptos. And I believe that Biden's planned crypto strategy will benefit the crypto market. This is because it is clear that the government does not wish to fall behind the global adoption of cryptos. And while they will weigh the risks, it is now quite likely that the U.S. government will take a more supportive stance toward cryptos. And now, there is another very important news for Dogecoin and other cryptos. But I'll come to it later. Let's first see how the crypto market has reacted to this update from the U.S. government. So right after this news, there was a slight decline in the overall crypto market. And we can see here that almost all cryptos are back in the red now, continuing their sideways movement. And we saw the other day that the extreme fear sentiment in the market was fading away. However, it appears that this latest news didn't go down well with the investors, and this is why the crypto fear and greed index has fallen from 29 to 20 points. But the important thing to note here is that we haven't seen a major sell-off in the market. So I know things are not looking good, but they are not too bad either. And this is why I think that there is nothing to be panicked about here. And as I explained before, this crypto strategy from the Biden administration will only leave bad effects in the market for a short term. And it will shape up things pretty nicely over the long run. But I'd like to remind you here that I'm not a licensed financial advisor, and this is by no means financial advice. So it is recommended that you do your own research before investing in the crypto market. And now, as promised, let's come to another very important update for the crypto market. So there is another bad news for cryptos, as it appears that the U.S. SEC is still not in the mood to accept a spot Bitcoin ETF. And just recently, the SEC has disapproved asset manager Fidelity's Wise Origin Bitcoin Trust Spot ETF application. The regulatory body said any rule change in favor of approving the ETF would not be aimed at preventing fraudulent and manipulative acts and practices, nor would it necessarily protect investors and the public interest. So this is bad news for Bitcoin and cryptos. And I think this is one of the reasons why the U.S. needs a proper regulatory framework, because it may open up the doors for spot crypto ETF. Meanwhile, U.S. lawmaker Tom Emmer appears to be furious that the U.S. SEC has refused to approve a spot Bitcoin ETF yet again. He believes that the SEC rejection of Fidelity's application is baseless. So the point is that even prominent U.S. lawmakers are now backing the idea of approval of spot Bitcoin ETF. And this is why I think that the SEC will change its stance sometime in the future. And when it happens, then it will act as a massive bullish catalyst for Bitcoin as well as the overall crypto market. And talking about bullish catalysts for Bitcoin, we are now seeing some good things happening for Bitcoin despite its current sideways movement. For example, Bitcoin whale addresses with 100 and more Bitcoin have continued their long-term pattern of accumulation during this recent price volatility of Bitcoin. And we can see here that in the past 5 years, more than 1.7 million Bitcoin has been added to these large addresses, including 60K more in the past 2 months. So the thing is that Bitcoin might not have found its right footing since the start of this year, but this has not discouraged whale addresses from accumulating more coins. And this means that whales are anticipating Bitcoin to surge in the long term. So this is very bullish for Bitcoin and its holders. And another important thing is that institutional investors are also getting into Bitcoin. In fact, institutional-sized transfer volumes are currently dominating the Bitcoin market. And we can see here that Bitcoin transfer volumes continue to be dominated by institutional-sized flows, with more than 65% of all transactions being larger than $1 million in value. And this uptrend in institutional dominance in on-chain volumes started around Oct 2020 when prices were around 10K to 11K, and it appears that institutional investors are only going to continue this trend for the long term. So this bullish trend is very positive for Bitcoin's price. And talking about investors and whales investing in Bitcoin, veteran trader Brandt has advised investors that it could be the right time to buy Bitcoin. Brandt has opined that market sentiment has become too bearish, which is why he believes that Bitcoin is likely going higher in the coming days. And we can see here that Bitcoin is forming a descending channel on the weekly chart. And even though such patterns are considered to be bearish in the short term, Bitcoin will likely see more upside if bulls penetrate the upper trend line. And this is why Brandt believes that this is a telltale sign of the market's top. So we have just seen some massive bullish indicators for Bitcoin, and it appears that we are now going to see Bitcoin moving up sooner than later. And this is making me more and more bullish on Dogecoin since its price correlation with Bitcoin is very high. And this is why I think that Doge is going to move up sooner or later.